Well, this is how to build a company you can sell. Just don't end up on Shark Tank and get denied.
Right. Right.
Is that like every entrepreneur's like worst nightmare? You're standing in a bunch like in front of a bunch of investors. You've had this thing on your mind for 10 years and you're so excited for it, and then everyone passes. Like
Oh, my goodness, yeah. But I guess they can take solace in the fact that there are lots of companies that they pass on that end up doing okay.
it's true, but could you imagine standing up there and like no one
Oh my
wants to give
God.
you know like not even the crappy offer from Kevin Leary, like I'll give you $100,000 for 105% of your company. And it's like, wait a minute, you want me to pay you to take my um, but I saw YouTube somewhere and I made a comment. It was about, selling your business or something. And I made a comment about designing your business to sell from the start. And they got like 50 or 75 likes on it in the first day or something. And I'm like, all right, obviously this is something people are interested in, so let's do an episode on it. Um, I think me. I'm that serial entrepreneur that I call you every day with a new business idea, which only makes us more busier.
Right.
Like, how many domains and trademarks and websites we have? Like, I probably have like 100 domains sitting out there. I got trademarks of stuff that we want to get moving. But from an entrepreneur standpoint, the comment I made was a lot of times we don't think about designing it to sell because as entrepreneurs we think we're going to do this forever. It's This is our baby. We would never sell it. This is what I'm going to do for the rest of my life. And I've got companies that I've been working on for 10 or 20 years that I realize I don't want to do all those for 40 years. And you look back and you go, there's some things I would have done differently on this company to get it in a better position to sell. There's a couple companies that I did do that where I'm like, I'm going to sell these one day, so I'm going to start developing this strategy because I know this would be highly valuable to like a PE firm or something, for
Hmm.
example. Um, but we could scroll down this article really quick and just
Sure.
see what some of their touch points are. It's the same thing as I'm probably going to say. Scalable product or service. Yeah, you can say scalable. We just say growth. I How many times have you heard of people say scale, Kane?
It's the most isn't it the most used like business lexicon term or something that means nothing?
You know, only you know, thinking outside the box is number two, and then scale is number one. We got to scale. How can we scale? Is it time to scale? We got to pivot and then scale,
Yeah.
and then we reevaluate and pivot again and scale.
It's house of lies kind of stuff.
It is hustle-ized type of stuff. It's, oh my god, you're driving me nuts with this. But no one wants to buy you. I'll take that back. If you got stable, reoccurring revenue and you're making good money, someone will probably want to buy you. If you want a better multiple than having growth, aka scalable, is very exciting to someone that is like PE that wants to make an investment. They're looking to flip their money. They want to come in, buy you, and then 3x revenue and get out within a short period of time. If they can't see the growth, that's not that exciting to them. Now, it doesn't mean someone won't buy you, but they might only pay 6x for something that is, nice, steady, consistent revenue. It's like buying an apartment building or something where you're not going to lose money on this investment and it's going to make you a few bucks. That's not worth paying 12x for, correct?
Right, right. I think if there is like a rule of thumb, you've got to get to a place where you can sustain growth at least at the growth rate of your industry. Otherwise, you're losing share. So as long as you can do that, I think you're in a good spot.
And then looking at number two, who wants to buy a business with poor cash flow? So it's just keep in mind, not very few, but again, we're talking like PE firms or trying to sell to a competitor or something like that. Unless you got some intellectual property or a competitor wants. companies don't like to buy you on the way down. Sometimes you buy stocks on the way down, right? You dollar cost average, you're trying to do a contrarian buy, you want to buy low, and this company's going to come back. Small business wise, if you see a downward trend, it's not the most exciting time to go purchase somebody.
Right.
And if you do, that you want a steep discount. So it's just one of those things that you want to sell while you're on the upward trend. And not only are you on an upward trend, you can whoever's buying you needs 3 to 5 years of runway to continue that. That gets someone excited. See, there's still positive growth opportunity here. Who wants to buy something on the way down unless they have a plan for you? But again, that's going to come with, a negative. So, what's number 3?
Hire a sales team.
Hey man, I fought with so many people over the years on this. It's anyone that I've tried to help coach or mentor on a startup. One of the first things I did when I was like 20, 21 years old for one of the companies I started, the first person I brought into the company was a salesperson. They just Howard Schultz, salesperson. Wasn't Warren Buffett a salesperson way back in the day? You have to be able to sell. And I think a lot of times we want to create a website and then sit around and wait for the phone to ring. How well is that working?
Not very well, no.
But it does work very well if you're an established brand with a great SEO strategy where you rank number 3 in Google and the phone calls come in.
Right. Yep.
How many people does that work for when you just start a company, though?
Barely. There's only one person in third spot, and as a startup, I think it's too difficult.
It's too difficult. So you have to be pushing all sales all the time. One of those things that everyone should be in sales mode 24/7. Doesn't matter who you are in the company. You got your HR person should be selling. Like, it doesn't matter. All day, every day, sales. And that's not a bad place to be. You can never have too many sales.
Great point.
Have you seen a case study where you saw a company go out of business from too much sales?
No, I have not.
Sure, it happened. But if I have to pick between too much sales and not enough sales, I know which one I'm picking. What's this? Reduce your dependence on anything but your scalable product. I mean, that's kind of a fluff topic. That's what's the next one. Launch a long-term incentive plan for managers. I mean, you do need to keep that core around. And in this world where you have a lot of churn and burn in the workforce, trying to get people to stick around is tough. So you can obviously create some kind of equity plan. You can even create, a phantom equity plan, which is easy to set up. There's got to be some incentive for the people that have all the knowledge to stick around. It's, and we did this on another episode where, Kane, how easy do you think it is to run a company and grow a company if in 24 months now, no one that's here today will still be here?
Yeah, almost impossible.
Could you imagine, like, no one is here that knew what we were doing 2 years ago?
Yeah, you're better off with robots.
You're better off. Robots are starting a new company.
Yeah. Well, it is a new company at that point, right? If nobody knows what they're doing. Yeah,
your customers, your life cycles, your relationships, the transfer of knowledge from one person to another. It's very tough. And I think if you look at a lot of the, even Google we talked about, if you look at a lot of their like VPs, for example, the upper management, they've all been there 10, 12, 15 years. That knowledge base matters. So, if I'm going to buy a company and I'm like, man, everyone here is new within the last 18 months, that doesn't give me warm fuzzies. Are you opening your checkbook for that one?
No, thank you.
So, I mean, you're always going to have churn and burn. It's like Deloitte. What's like the auditors they burn through, Kane? They work like 70 hours or something.
Yeah. Yep.
Those people are going to turn over. But the people like you need to keep that brain trust together if you want to sell your company one day. It's I've talked to PE firms before about buying, some of my companies, and most of them will straight up say, we want to make an investment. We're not looking to buy you all the way out right now because we don't know anything about your business. Like, we don't want to come in and run your business. We want to invest in your business. So they're going to look at your management team and say, okay, well, who's there to actually run this thing? Because they're not looking to run it. They're looking to make an investment in it or buy it and flip it, for example. convert offers to a binding deal, letter of intent. I mean, this is all, I don't know. This is lower level stuff to me. My thought is we always focus on sales, 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 and sales. You can actually sell a company that isn't even making any money if you show a crazy sales trajectory. Because, well, what do you normally see that in tech, right, Kane?
Yeah, right. You've got to be able to justify on the acquiring firm side why they need to buy you. So you've got to have either cash flow or growth rate or just something that's valuable long-term, recurring revenue, as you said. So something.
Yeah, you said Dropbox they were spending some crazy amount of money to acquire customers at some point.
Yeah, early days they were spending like something like I don't remember the exact value now, but a ridiculous amount over their customer acquisition was way over their lifetime value.
But that's, but they showed that we're getting these customers in a long enough time frame on the subscription. This is going to pay off. So
yeah.
It's, all tech companies start off like losing money, but they're still extremely valuable. And a lot of this just comes down to sales. What is the future of sales? What is the future profitability? If you can't show some kind of upward trend in sales, then good luck selling your company. Be very marketing, very sales focused from the get-go. 2, you got to save money. Don't blow your money. If you are spending money, you should be looking to get every dollar you spend, you should be looking to get something back. You can't always spend $1 and get $1 back. You can't always spend $1 and expect to get $2 back. But if you're spending money, you got to say, okay, I'm spending $1 and I'm at least getting 20 cents back. That's, starting a company, you lose money at times. It's just overall getting yourself into a position to get someone excited to buy you. Why do I want to spend even 5 or 6 times your earnings if I feel like this thing might go backwards? Constantly painting that picture of stability and reoccurring revenue is paramount, but nothing gets people excited more than growth. And I think when you start that from like day one, it's just growth. A lot of times as business owners, we want to get some money in our pockets right now. We're focused on making profit. It's there's someone I know down the street here. It's a business owner. He's worried about buying his 3rd Range Rover. Instead of kind of just focusing on just the growth, or I don't want a big business and I don't want the hassle. Well, Kane, how many investors like really small businesses who aren't going anywhere?
Yeah, right. Where the owner's like pulling all the money out to buy Range Rovers. Yep. Nope.
And it's that thought of, the stability of being small. There's no stability in like a 5-person company or a 10-person company. It's the people that buy companies tend to start getting more excited when there's 20, 25 people, a couple $1 million in revenue. They get even more excited when it's a 50-person company that's doing $5 million in revenue, that's, got $1 million or $2 million EBITDA. And then I don't know if you know, but that magic number on earnings is 10 million. It's 10 million is kind of when things get serious, when you start looking at like investment banks to offload your company. So that point revenue might be what, 35, 50 million or something, depending on your company. It's getting to a good sized company, but that's when things really get serious. But even at 5 million earnings, things start to get pretty serious in the big PE and investment bank space. So you might not want this big organization, but in terms of liquidity, in terms of selling your business, the bigger you are, the easier it is to sell it. The more growth you have, the easier it is to sell it. And it's one of those things that we want to stay small business minded, and then we want to sell this thing. Well, if you want to be small business minded and act small business and just have a small business, then people pay small business money.
Yeah, good point.
It's just one of those things. If you're building to sell, you probably want to get this thing as big as possible. The bigger you are, the more stability you have. I mean, if you got 10 people in your company, it's possible in a bad year, 5 of them will leave. It's, great resignation. And the next thing you know, like, you don't even have a functioning company anymore. No one wants to spend, Ken, let's just say you grow your company to be $5 million in earnings and someone's paying you 6x, that's $30 million.
Right.
And we know 6x, we're hearing that's on the low side. We're seeing things as high as 12 to 13x.
Mhm.
Well, 10x at 5 million is $50 million. Would you spend $50 million on something that you think could, like, fall back by 50% in the next 18 months? No.
Yeah. No, no way.
So it's one of those things that, size is going to matter whether you want the headache and the hassle or not. So um, from the get-go, marketing, branding, sales, advertising, every day that conversation should be about growth. Obviously, you want to make profit. This matters. Margin matters, profit matters, this all matters. But the number one thing is just growth. And making sure you have that team in place. So, if you want someone to cut you a check for 15 or 20 or $30 million, that investment needs to feel safe. There's a team in place that's not going anywhere. There's at least some kind of incline on the sales chart where there's some growth opportunity. Um, yeah. What else? You got anything else to add?
Just the one thing I would add, like growth, definitely, I think is probably the most important part. But I think the underlying that would be stability, and as a small business owner, the goal should be to get to a level of stability, and across all your metrics. So stability of growth, stability of margin, stability of revenue, stability of client retention, for example. Because I think what should happen, and correct me if I'm wrong, James, because you've been in this position, is when you actually get to a place where you get stable 5 million EBITDA, for example, the decision to sell should be difficult because your company is at a point where if you just hung on to it, for example, it's very healthy cash flows and kind of very healthy liquidity for you. So, but that requires stability. And I think that's what the same reasons why a PE firm or an investment bank or somebody, your competitor, would want to buy you is the same reasons that you would want to hang on to your company, I think. So I that's how I feel.
I mean, if you think about that, let's just use $1 million because the people tuning in here probably aren't at 5 million earnings yet. Even at $1 million earnings, you know, if you kept that business for 5 years, you make $5 million in cash. And PE firms are looking at the same thing. If this thing just goes straight across, and I paid you $6 million for your company, well, in 5 years, I'll make 5 million in cash, and I still have the business as an asset, right? So yes, the stability is probably like number two up there with the growth, right? Because again, every investment's a risky investment. Doesn't matter what it is. But when you start looking at that, how do you make them feel comfortable to write that check? If I look at 2 years of sales and 1 year was really big, like last year was really big and the year before was terrible, and it would just happen to be the market conditions is why last year was good, and that's not sustainable, that doesn't make your business very attractive. So again, that's where I can see that consistency and like just generating revenue. Is your customer acquisition cost pretty flat or decreasing? Just stability, like you said, across everything. Not this roller coaster of did good in 2019 because of this, and then did bad in 2020 because of this, and then it should be we know why things are happening and we can kind of control them. No one wants to buy something based on you do good or bad based on the market. Like you got a better chance of playing circus games.
Yeah, yeah.
Carnival games, right? When you try to throw the ring on a pop bottle.
That's exactly what I was picturing. Yeah.
No one wants to write you a $5 or $10 million check to play that game. Trust me.
Yeah.
They're looking for something that, going back to number, they can scale. That if they throw some money into on the balance sheet and there's room to grow and they add some headcount, that they can increase this incline by X percentage with very low risk. We get all our customers from Google AdWords, and then if that stops working, the whole business fails.
Mm-hmm.
That's not something that, I'm not saying it's not investable. It's a lot harder sell. Saying we are completely dependent upon Google AdWords to generate all of our sales leads. But what happens when that customer acquisition cost triples?
Then what? Right. Then what?
So, yeah, they want to invest or buy a company that they understand all the risks, and having the stability and knowing that you're able to generate the revenue and the customer base with by things you can control. Yeah, you can control AdWords, but you can't control the price.
Mhm.
And that would be a concern, for example. So again, and not back to having hiring a sales team. Like, you know that a 10-person sales team can generate X, and that's probably always going to stay fairly equivalent as long as you're hiring the right people. That's stability. That's predictable. No one wants to write checks on unpredictable.
Yeah, right.
If I want unpredictable, I can go to the casino.
Yeah.
Hey, I don't got to go to the casino anymore. There's so many ads on TV now. It's like, I guess you can go to the casino from your phone, but
Yeah.
changing times.
Changing times.
I don't know. I say from day one, don't convince yourself you're going to do this forever. It's, if you're young, if you're listening to this and you're in your 20s, do you want to do this for 40, 50 years? You say that now. And then you get 10, 15 years in, it's like, man, there's a lot of other things I'd like to do if I cashed out right now. So, and the good thing is, if you build it to sell from the get-go and you don't sell, then what's it matter?
Yeah. You've probably built a stronger business. Yeah.
You probably built a stronger business. So. Anyways, that's all I got for this one, man.
Sounds good.
All right, I'll catch you.